Peter Eliades back with you again, Monday, January 27th, Stock Market Cycles Update. Been gone for a week. We missed it a little bit. I hope you guys missed us a lot. It's been an exciting week, has it not? Let's take a look at where we left you off on Friday a week ago, January 17th, I believe. You did not have this move down on the daily advanced decline line. What you had was the exact top on the daily AD line, and we pointed that out to you, said we had come up to the top of two channels and emphasized that that should be a good place to stop. We also emphasized it was probably not a final top because the AD line was making a new all-time high at the same time as the popular averages and indexes. But there certainly was room for a decline, and indeed a large decline. Well, we've seen something start so far, and I just wanted to show you this chart because this is one of the two that we emphasized when we left you a week ago Friday. The other one that we looked at, this is the other one that we showed you, a very important chart too, New York Composite Index. I've said many times that overall the New York Composite Index gives probably the most consistently accurate projections. The problem we've had for the past couple of months, even though the S&P almost met its projection in the November time period, just missed barely, and easily met it by mid-December, the New York Composite Index had not yet gotten up there, as you can see. Well, guess what? On the 15th of January, for the first time since the projection was given way back here in March, April of 2018, to make that 2019, we hit it for the first time on January 15th. So the New York Composite Index met its nominal 40-week projection. Got a little bit above it over the few days after that. And by the time we talked to you on the 17th, this was it right here. It was at its high, okay? And we had entered into the projection zone quite easily, as you can see. So those were the two charts that we showed you. The one chart we did not show you, although we have shown you several times in the past, is this. This is the S&P 500 with the same nominal 40-week projection. Why was this chart so important, however? We didn't show it to you on Friday. Where we did show it was in the report that we encouraged you to get that went out on that weekend. We did show this chart and made a big point of this upper side of the projection window, 33, 31, 11. We said in that report, as we showed the upper side of the projection, that we had no good reason projection-wise for thinking the market would go any higher than that over the short intermediate term because of the fact it was the uppermost side of the projection. Well, take a look at this. I'm going to zoom in on it for you too. Do you see it going above that line? Okay. I was going to say I was wrong. The projection was wrong by 6 points. So divide that 6 points by the 3,331.11 and see how far off it was. That one day. Now look at this. Watch this. I wrote these down. This was the 17th right here. That's the last day we did the update. A lot of the indicators reached their highs here. These were the highs on the respective days for the S&P 500 cash index. Remember again, this number right here, 3331.11, was the uppermost side of the nominal 40-week projection. Here were the numbers. On the 17th, I'm going to read these off, and they're rounded off. On the 17th, 3330. On the 18th, on the 21st, there was a holiday, remember? On the 20th, on the 21st, 3330. On the 22nd, that's the one that pierced slightly above it, 3337.77. The following day, on January 23rd, 3327, and the day after that, 3333. Remember, this is the uppermost side of the projection, the green line. So this in and of itself was giving danger signals, saying, hey, two factors took place. Number one, you were up the uppermost side of the S&P projection. Number two, you had just entered within the past 2 or 3 days, this is a week ago Friday, into the New York composite projection. So we had those two factors going for us. Here's the interesting part. You're going to hear, and to a lot of people, it's somewhat intuitive news-wise what this decline is all about. Well, don't try and think, Eliades, that the market came down because the uppermost side of your projection was reached. Have you been reading the news about the coronavirus? Yeah, I have. As a matter of fact, the news was out several days before we reached the top. And I get so frustrated with all this malarkey about the news. Yes, we knew about the coronavirus before that. Well, yeah, but we didn't know that it was going to really spread as quickly as it did, and that's why the markets had a couple of bad days here. Okay, all I can say is believe what you want. Sooner or later, I'm going to get you to believe very, very confidently in these projections. So, what now? We've reached the uppermost projection in the S&P. Now, there are ways, what I won't discuss now, that you can come down, have a good decline, as we've had already, and then do what I call a loop projection, which will come back up again. And it won't be a longer-term projection. It will be a shorter-term projection going above these declining offset lines that we're just establishing now. So I'm not going to go into that explanation now, but there is a way over the next few weeks we could go to a higher high. I'm not saying I do or don't expect that. I'm just telling you there is a way to do it after we have now met the uppermost part of this projection and had a significant decline from there. So let's take a look at the daily closing price chart on the New York Composite Index. That will give us some pretty good indications as to what we're doing here. Okay, here is the New York Composite Index. Now, I have this rectangle in here, although as you can see, no projections to the downside here have been confirmed. We've been below the first line, but not below the second. So a preliminary projection down to this red line has been given. But let's back up a step and take a look. Here's what we want to look at first. The first thing we want to look at on the closing price projections is here to show you that on Friday of last week, this is just the last market day before today, we closed right here. So had we been showing you these updates, or if you had this projection software, you would have seen on Friday of last week with the market closing at 13,978.47, which is almost exactly where the crossbars are right here, that we had crossed below both, confirmed a projection at least down to this box right here. So this box that has 13,850 to 13,902 rounded off. We knew that with good confidence on Friday. So we look at the next longer projection, and we indeed have broken through there and gotten down to a reading today of 13,770 rounded off. But this is important that happened today. Look what happened. Did we go below both of the offset lines, close below them? Indeed we did. And what does that give us? It gives us downside projections on the New York Composite Index to between 13,613, make that 14 rounded off, and 13,700 rounded off. Now, either these projections are met or they get invalidated. How do you invalidate them? You should always be aware of what it would take to invalidate upside or downside projections. In this case, you'd need to get above both these offset lines again. That would be a big move at this point. You can get above the first offset around 13,900, but to get above the second offset 9, you'd have to get pretty darn close to 13,950 to 14,000, I should say. So this is a confirmed projection right now on the New York Composite Index, okay? That is the third chart in the series, and now I want to show you the fourth chart in the series. Okay, now why is this box here? Not because a projection has been given with these offsets, but because a projection has been given with the other offsets that we just looked at. And we can see that if this projection is met, we're going to cross below both of these offset lines and give a projection at least down to here. I want to give you an idea as to the progression of how you work with these things. Because, by the way, we're starting to think that we may have this software available for you end of February, beginning of March. In some way, we might be ready to begin to market it at that point. That's only 4 or 5 weeks away. That's pretty exciting. So I want to go through the procedure here with you as to what you look at, little by little. So the reason I put this box here is that we already have a projection down to there. If we even get down to the minimum downside there, that'll be right here tomorrow. You've got significantly lower projections because you've crossed below both these offset lines. Let me go over that with you again. Here is the next day, and this is today. The blue line is the close, okay? Here's today's close. Let's go out one more day. One more day is right here. If you go down from there to the highest downside projection that has been generated and confirmed already, that's right here. If you close here tomorrow or within the next few days or lower, then you're getting a crossing of these two bars and a projection at least down to this level, which is 13,452. Right now it's 13,452 because you've only crossed below one of those lines. So that's how all these things fit together, and that's how you do your analysis. Let's go a little further because we haven't been on for a week. We're going to be longer than usual here. And let's now take a look at some 27-minute intraday charts. Okay, here we are, 27-minute chart. Now, this is the sixth in the series, okay? 1, 2, 3, 4, 5, 6. Some of these were shorter-term projections that were given and met, but this is the one that's important. This one was given in the opening bar this morning right here, and the projection was given and confirmed right there with one bar, went through both of these offset lines and said, okay, here's your downside projection. And it called for 32.26 to 32.49 and a quarter. The low today, right in the projection window, 32.33, okay? So now, what we want to do is, here's the rule again. When all projections have been met, you take a look at the next longer, usually it's the next longer one in the series. Sometimes they don't go consecutively, but usually you would look at the next longer one in the series, and what does that show you? Well, that happens to be this one right here. So if we take a look at this one, whoa, now isn't this interesting? All this space up here, this big move, this huge move today, and look where we are. We're below the first line, but not below the second. So we should have a preliminary projection down here somewhere. There it is. Look at that. Again, this is preliminary for the S&P futures down to 31.71.75. In order to confirm that, you need to get below the blue line here, which you can do very easily tomorrow at some point. And just generally speaking, that price is right around 32.38. Now, I'm not talking about one tick below 32.38. You need to get the midpoint of one of these bars below 32.38 or so, 32.36 it looks like here, and then you'll have yourself a confirmed projection at least down to this level. So here is the sequence of how these projections work. And hesitate to use the word, but in almost a mystical, magical fashion. Little by little, they start giving you projections either to the upside or downside, and you follow along in the sequence. Now, here's what's interesting. This is for the S&P. I believe that if I go to the equivalent cash charts, which are 30-minute charts, look at this. This is the Dow Jones Industrial Average. Same type of offset, same on a relative basis. Remember, one is a 30-minute chart, the other one a 27. But this is the equivalent of a 12.1-day offset for a nominal 5-week projection. And this one has been given and confirmed today, calling for a Dow down to 27,731, 27,968 or 9. Write these numbers down. How do you invalidate that? Well, preliminary invalidation is pretty easy. All you have to do tomorrow is get up to 28, 7, 40, or 50. But to get a final invalidation above both lines, in the next day or two, you need to get above 28, let's say 980 or so. And that's 400 or 500 points above where we are now. It could happen, sure. But here we are below the line. Let me spread this out a little bit now so you can get maybe a better picture of this to see how they all interrelate. This is the interrelationship here. Okay, here's the last bar today. Remember, these are half-hourly bars, and we closed at the lower end of it. So tomorrow we could have a rally very quickly that takes us up into the 28,700 level, and you say, well, wait a minute now, this is starting to perhaps call this lower projection into question. But in order to do that completely, you need to get above the red line also. But this projection, again, we're in a situation where the projection is confirmed. So only one of two things can happen. Either this projection is met by getting inside the projection window, or you move above both these lines and invalidate the projection. Okay, it's been a long update. I'm going to do some editing here because I've done this over a longer period of time. Hopefully cut it down for you and won't have to wait while I switch in between charts and things. So thanks a lot for watching. I hope we've been helpful to you. I'm starting to get some negative comments again about, boy, you've been bearish for 3 or 4 months now, and what's the matter with you, and why can't you see the fundamentals are so important? And I mean, if you people have been watching me for 3 or 4 months, after I'm showing all these upper side of these projections and the lower side of some of them, and say I've been bearish for 4 months, there's something wrong out there. I'm not communicating my message. Anyway, if you have not subscribed as yet, click on the bottom right of the screen. Click to subscribe. Once you do that, a bell will come up. Click on the bell. That will notify you of all the projections. It's nice to be back with you. Thanks a lot for watching.